Okay, we have a major problem. On October 21st, I posted this video to the channel. Major stock market correction is coming, where I said over the next 6 weeks, you were going to get a 10% correction. Could be larger than that, but at least a 10% correction. Well, what we've seen today in markets kind of validated what I said 2 days ago to a certain extent. We did get bad news out of Apple and Nvidia that caused markets to break down lower. But we're probably going to get even more bad news in the weeks to come. So this could just be the start of this 10% correction that I have been calling for. Now, keep in mind, I don't make this video to scare you. I don't make this video to tell you to sell anything. I don't make this video to tell you to buy anything. It's really just a heads up to what is coming next. Because let's be honest, reflecting on the past, even yesterday, does nothing for you today. I like to be early to things. I like to give people a heads up to things before they happen, for better or for worse. And I wish this was a positive video, but unfortunately it's not. Now take that for what you will. If you get mad at me and you don't agree with me, that's fine. You are entitled to have that opinion. But I also feel obligated to point out when we have a problem. And that's what we're doing here in this video. So just keep in mind, I'm not a financial advisor. I could be wrong on all of this. We'll see. Let me know your thoughts down below in the comments section, first and foremost. But what I said 2 days ago on October 21st was in regards to Apple Intelligence. Now, Apple Intelligence is going to launch next week. The expectation is that we are going to have a big upgrade cycle for Apple via Apple Intelligence. Now, I don't know about you guys, but I haven't heard anyone talk about Apple Intelligence. Most Apple users have no idea this is coming. And let's be honest, to the extent of ChatGPT was revolutionary, I don't think this is going to be any bigger than that. And I think at this point, consumers, they don't really have it in the budget to go out, upgrade their phone and jack their phone bill up every month, or go out and pay $1,000 in cash up front for a new iPhone. At least that was the thesis 2 days ago. And to some extent that was validated today, and we'll talk about the news that came out for Apple today that really, helped derail the AI trade. But I think the question is still an open-ended one in regards to Apple Intelligence. Now, think about it like this. As I explained 2 days ago, the metaverse was something that Meta has been developing, spending a lot of money on for like 10 years now, with successes here and there, but really it didn't go anywhere. That wasn't a problem until 2022. It started to become a problem for investors in Meta back in 2022 because it was seen as the advertising company itself was slowing down, and they're just plowing billions and billions of dollars into metaverse, and the losses were starting to pile up as they were trying to develop that even more. And Wall Street revolted against that spending on the metaverse. They kind of forced or coerced Meta into slowing down that investment. That's what Meta did. Meta stock was rewarded for that. Okay, so with all of this AI investing, the company that has invested the most has been rewarded the most. That's why big tech has all been doing well, and they've all just continued to raise their AI capex budgets in the hopes that these, AI budgets will lead to returns in the future. Now, I think it's fair to say if Apple Intelligence is not a wild success, or at least a moderate success, there's going to be a lot more concern about the AI spending that companies are doing. Because if Apple cannot create a product that gets people talking about it or gets people buying the new iPhone, then what other product is? That's the problem. So my theory was 2 days ago that Apple Intelligence was probably going to flop. And with expectations so high, basically assuming this was going to be a home run for Apple, there's no room for that. So even if it's a mild success, it's still going to be a problem. And I personally think it's going to be a flop. I don't think people are going to care that much to the extent that Siri can do most of what we've already seen Apple AI is capable of doing. There's not really too many new innovations with Apple Intelligence from at least what we've seen so far. Now, it was reported that Apple is integrating ChatGPT in the early release of Apple Intelligence that will start today. So we'll see how consumers take that one. But I think that is still the big risk. The Apple Intelligence flops, and it causes Wall Street to question some of the AI investments. Now, that's obviously a big problem for NVIDIA, which is like the literal market at this point. If NVIDIA were to sell off or slow down, or if big tech companies slow down their investments into NVIDIA, that would be a massive problem. And that's why I say we're going to see a 10% correction, but it could be more than that. It just depends how dramatic this, Apple Intelligence flop is. If it's a complete disaster, then you're going to see much more than a 10% correction, because then Wall Street's going to say, maybe we're not going to see returns on these AI investments for 5 years, 10 years. And then these companies that are investing this money today are basically just wasting money. And that would be the more like 25, 35% decline scenario. I don't want to come off as that bearish, although that is a possibility. I don't know if that's going to happen overnight. Okay. It could, definitely could. I think you're seeing the start of some of those concerns here today. So let's get into this Apple news. Now, it was reported today via an Apple analyst named Ku that says Apple is cutting iPhone 16 orders by 10 million units, which really throws cold water on the idea that this Apple Intelligence feature will drive more upgrading. Now, he does point out that most of the cuts affect the regular iPhone 16 instead of the iPhone 16 Pro models, which have nicer displays and better cameras and have have been more popular with consumers. It says, as a result, iPhone 16 production for the second half of 2024 is now estimated at 84 million units, Kao said, noting that is down from about 88 million units initially estimated for production. So this is causing Apple to fall about 3% today, which is a big deal for a company the size of Apple. Analyst that broke this news says, quote, I believe that Apple is best positioned to succeed in on-device AI, and I am confident about the long-term potential for Apple Intelligence to become a popular paid service, Kyle said. However, significant growth in iPhone shipments will likely require further hardware innovation to accompany this AI development. So longer term, Apple's actually expecting this to be a service that people pay for, and I don't think people are going to be willing to pay for these things as of right now. I don't think the adoption curve has gotten to the point where you're going to have millions of people that actually pay for Apple Intelligence. And I don't think we're going to see those results next week. I think it's going to be very underwhelming. And I think the fact that Apple is cutting their orders by about 10 million phone units is a sign of Apple. It's just, they don't expect much out of next week's launch. And that really caught the markets by surprise today. But it was not just Apple. It was also NVIDIA. NVIDIA was down about 4% today after Jensen Huang said the company had resolved a design flaw that pushed back Blackwell production to the fourth quarter. Reuters broke this news today. So we kind of knew there was an issue with Blackwell. We thought it was resolved, but apparently there was another issue with Blackwell, and now production is being delayed. Now, is this going to hurt NVIDIA? Maybe for a quarter. Is it a huge deal? No. And NVIDIA says this design flaw was solely NVIDIA's fault, and it wasn't anyone else's fault. But when a stock like Nvidia, as big as Nvidia is, as centric to the markets as Nvidia is, has this bad news after its rally to new all-time highs, just doesn't sit well with markets. Now, this article goes on to say from Barron's, the next question is whether those companies will commit to spending more on Nvidia's new Blackwell AI chips. On Wednesday, Jensen, he said they fixed the design flaw with Blackwell. But that's now the question. How much are big techs going to spend on AI investments? I think it's one of those scenarios where companies probably want to slow down their investments into AI, but if they're the first company to do so, they might get punished for that. So it could be one of those things where Wall Street starts to force these companies to slow down their AI investments. Kind of like what happened with Meta. Wall Street starts selling off these stocks because Apple Intelligence is a flop, and this money that's being invested today is seen as kind of wasted money. Then that's going to be a much bigger problem to the AI sector of this market. Now, I should also point out, the way I'm looking at this market right now is not just as one piece. I'm looking at this market from the aspect of big tech, and that's really all about AI. And I'm looking at this market in terms of the rest of the markets. Now, 10-year Treasury yields, TLT. TLT sold off today alongside big tech. That's not great. Now, 10-year Treasury yields hit 4.26% today, which is really not good. You're above that 4.2% level that I think is a critical level for the broader markets, where it's going to make it really hard for the broader markets to rally. So let's imagine that 10-year Treasury yields did not rise and they were, being well behaved. Then I can make an argument, if AI flops in the near term, that money would just rotate into the rest of the markets and we would see a broader rally. But if 10-year Treasury yields are sitting at 4.25%, look to be going even higher, and it's just every day these yields are going higher, the velocity is pretty ridiculous, then I think it's going to be hard, even if AI flops, to get a broader rally. That's the issue. You are likely going to see downside pressure on the rest of the markets if big tech and AI cannot hold the markets up. If AI has its own disappointment, that's where you get that 10% correction. That's where you could get a 15 or 20% downside move in markets if the rest of the markets cannot rally and kind of make up for the drop in big tech, because I think AI disappointment is coming either way. And I don't think the rest of the markets can rally if 10-year Treasury yields continue to go higher. That's just my thought process. So at this point, if we get bad news from AI, markets, the rest of the markets are not in a great place because of Treasury yields, then there's not much to kind of hold this market up. That's the issue. If 10-year Treasury yields, again, were being behaved and they were not just going up every day, then I would think a sell-off in AI would be to the broader market's benefit, but not in this rate environment where 10-year Treasury yields continue to go higher. And I did find it concerning today that TLT liquidated, sold off as big tech sold off. And the larger the big tech sell-off got, the larger the sell-off in bonds also got. So I think that is quite concerning from a market dynamic standpoint, because if bonds just follow big tech and big tech sells off, bonds sell off, and yields keep rising, that's going to pressure everything. That's going to pressure the entirety of the markets. And I don't think that's good. Not at all, at least in the short term. Now, again, to make matters even worse, from now until the election, there's probably going to be more uncertainties, more fears, and I don't think the election coming in, 13-ish days from now, 14 days, something like that, is going to be a positive for markets. So at the same time, you have potentially AI disappointments, 10-year Treasury yields rallying, really the entirety of the yield curve, especially long duration yields rallying. you also have an election coming up. And I don't think that's particularly good for markets. Now, Tesla is very dependent on 10-year Treasury yields, and we've seen what happened today with Tesla earnings. Now, later on tonight, once we have time to digest everything that was said on the earnings call, there will be a video coming out later tonight, 10, 11 p.m. Eastern Standard Time, maybe around midnight or so. That video will be coming out. But I think all of this information also ties into Tesla, because it's going to be very hard for Tesla to rally at all if you see, the markets going through a bit of a downturn. And that's something that is also concerning if you are a Tesla stock investor. Now, is it the end of the world? Obviously not. And if you're a savvy investor, then you should take advantage of this. You should buy the dip in Tesla. You should buy the dip in some of those stocks that maybe you want to own but have been a little on the higher side. I think raising some cash right now is still a very good idea. I've been talking about this for months now in preparation for a correction. Now, also worth mentioning, tomorrow morning we will have initial jobless claims. You will get the composite PMI, manufacturing PMI, services PMI. You will get, I believe it's Philly Fed data. You will get some other data, but initial jobless claims will be very important. Some people are saying that data got leaked today, and that's why markets are also selling off a lot. I don't think so, because if you look at the RSP was actually outperforming the S&P. The S&P down about 1.3%, RSP only down 0.58%. So if that data was actually leaked and we got bad initial jobless claims tomorrow, then I think you'd see the equal weight S&P underperforming the market cap weighted S&P. But that's not what happened today. So I think that'll be big coming tomorrow morning. But again, we are in this seasonal weakness period right before the election that you mix some AI bad news, rising 10-year Treasury yields, an election, just, 2 trading weeks away, and that's a recipe for a correction. Now, on the S&P 500, again, I was calling for a 10% correction from the highs. That would put the markets down to about 528 or so. That is almost exactly where the 200-day moving average is, at $528.25 per share. So 10% correction aligns with that 200-day moving average. That looks pretty likely to me. Now, here today, it looks like you found a little support around that 20-day moving average, but you are under that. So if we fall under that 20-day moving average at 576.29, then you're pretty shortly probably headed to that 50-day moving average at 564 on the SPY. So I don't know. I just think we're in the early stages of this still, and I think there's time to still protect your portfolio, raise cash, buy a couple hedges if that's something that you guys like to participate in. Obviously, you don't have to do anything at all. If you're a longer term investor, you'll be just fine. This is not the end of the world, of course, but I really like to just give people the heads up that I think they deserve. So that's the purpose for making this video. Let me know what you guys think down below in the comment section. Again, we will be going over Tesla's earnings call, what happened. I'll share the highlights with you later on tonight. I want to give some people some time to digest what we heard. I think that's always a good thing, but we'll definitely keep you informed on that front as far as a correction in markets that's obviously going to impact Tesla as well. So plan accordingly. And again, let me know what you think about this information down below in the comment section. With that said, ladies and gentlemen, you guys have a fantastic rest of your day, and I will see you in the next one.